Hi everyone, Donnie Schultz, Embrace Home Loans here with your market update. It is Thursday, July 21st, a little bit after 5 p.m. A lot to unpack. What is going on with rates? What's going on with bond markets? We're seeing all kinds of headlines about, housing about to pull back and a shift in markets. We'll talk a little bit about that. But interest rates are the big questions. We need to know, what are interest rates doing? What are our buyers looking at? I think the general conversation is that, interest rates are still moving higher. That's not the case. Rates peaked back in mid-June, right after the inflation data report came out showing higher inflation. We saw 30-year fixed rates go above 6% very briefly, and then both the 10-year and mortgage-backed securities pulled back accordingly. Rates have settled probably in the mid 5% range. A lot of lenders between 5.5, 5.625 as of today for their 30-year programs. Well off the highs. Markets are, sending signals that we most likely have hit the peak of this move up in interest rates, and now we wait to see if they will start moving back lower. I do think we have a little bit of time until that occurs. I think markets are going to want to see inflation data actually starting to come back down. So rates peaked back in June. We had another inflation report that came out mid-July that was higher than June, which definitely caused a little bit of panic when it first was released. And we thought, oh man, these rates are going to go right back up to 6%, possibly higher. And markets took it in stride. And that shows that many traders, many analysts feel that the July report was peak inflation. Now, that will not be confirmed until August's release. So mid-August will be very big. If inflation data comes in higher than July in the August report, rates will most likely start moving back higher. If analysts and markets are correct and we have seen peak inflation, which, if you just look at gas prices, you look at food prices, they might not be super noticeable, but they have started to come down. So that's why a lot of traders are saying, hey, we've hit peak inflation. The next report should be lower than what we saw a couple of weeks ago. If that holds and inflation starts coming down, then the conversation for rates will shift from inflation to economic data. Right now, economic data is showing slowdowns. We're seeing slowdowns in manufacturing, consumer spending, durable goods, GDP. Globally, this is not just a United States issue. Central banks are all doing the same thing. They're all dealing with inflation. They're fighting inflation. The best way to fight inflation is to slow down economic growth, slow down spending. That's exactly what's happening here. And that will pull rates back down. How quickly do they come back down? Really depends on the data. If we are getting very weak economic data, which, right now it's a little bit more mixed, then we will see rates come down, and they'll come down pretty quickly. If we see inflation continuing to be a problem, rates will move higher. So there's a lot of ifs right now. If we were just looking at this today, we would say, hey, we've hit peak interest rates, we've hit peak inflation, and that's a good thing for buyers. Now, second piece of this is, what does the economic slowdown do to housing? Big question. Is it a shift in market? Are we going to see inventory increase because there's not as many buyers out there? It's definitely possible. Certain areas in the country, in my opinion, are going to be hit harder. Areas in Texas, Nashville, Florida, where there have been these just very big growth in prices and demand over the last 2 years. I mean, I do a lot of business down in Texas. We've seen Texas go from, we've seen 50% increases on properties down there over the last 2 years. I mean, significant increases in valuation. Those areas are probably more susceptible for pullbacks in price. Long Island probably a little bit more insulated in this case. Right now, inventory is still a big problem. A lot of areas under 2 months of inventory, 2.5 months of inventory. I've spoken about this on previous market updates where I think we need to see inventory get up to 6 months or more before we start seeing values pull back, and that's going to be a big question mark. Do we get to that inventory number before rates move lower and the market's flooded with more buyers? Recession usually comes with job losses. Right now, there is a large number of jobs available. So, we probably will not see big unemployment upticks, particularly here on Long Island, because of the number of jobs that are available. The question will be wages, right? Do wages keep up? Are buyers able to come back into the market with lower interest rates, with reduced earnings, if that's the case, and still be able to buy these properties? If values don't come back down a little bit, it's something that we'll have to keep an eye on and watch. But as of right now, there is really no signs of a potential drop in values in the Long Island real estate market. Are things going to level off? Absolutely. Are we going to see values go up 20% each year? Definitely not in these conditions. But I don't see a situation where we're looking at significant drops in valuation. And that's something that buyers need to be aware of. Buyers need to be taking advantage right now and going after these properties if they can afford them. We want to make sure we're not stretching our monthly budgets too high. But this is a market where there's opportunity. There are buyers who are falling off, who are dropping out because they've seen these rates go up. Embrace Home Loans has recently released a new program called Prime Plus. It's a lower interest rate program. We are locking in 30-year fixed rates at 4.875, 4.99% for 90 days on these programs. Loan amounts from $400,000 up to $3 million. We'll finance 90% of the property from $400,000 to $1.5 million. I mean, it's a fantastic program. Minimum FICO score is 700, 10% down payment. Outside of that, there's some pretty minimal overlays compared to conventional financing. So it's a really good program. We're able to combine it with our value guarantee at offer, where we'll take the borrower's offer, have them fully credit approved, evaluate the property, and guarantee the value so that they can waive their appraisal contingency risk-free. Any questions on either of those programs, we do have videos on the YouTube page. You can reach out to me or my team anytime. Just gives our buyers a competitive advantage in this market against other buyers while helping to offset the increases in interest rates and the increases in cost of borrowing that they've been dealing with for the first half of this year. Again, anybody has any questions, reach out to me, my team, anytime. Hope everybody has a great day. Talk to you soon.